Hi there, I am John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about whether or not you should buy an annuity with your 401k or your IRA. So if you have an IRA or a 401k, you might be thinking, I'd like to purchase an annuity and put it inside of this basket, this tax-deferred vehicle that I have, and be able to have lifetime income. And maybe you're looking just for a MIGA and you want just a fixed rate of growth and you want market protection from that with using a MIGA or even just a regular fixed index annuity. You can do that with those as well. But you can't just put it in your 401k or put it inside of your IRA. You can buy it with your 401k or your IRA, but what happens is when you purchase it with the carrier, and I'm going to show this on my screen here in just a second, what this would look like. But if you're purchasing, let's say you've got 500 grand in your IRA or your 401k, okay, doesn't matter which one it's in. If you purchase an annuity with those, then that money will be transferred via a 1035 rollover from the 401k or a 1035 transfer from the IRA over to a new IRA held at the insurance company. Okay. So, and that will have the annuity contract inside of it. The annuity contract will be funded and issued. And that, if you were doing lifetime income, that lifetime income will come out of that basket forever. It will always come out of that traditional IRA. Now, if you decide after purchasing that annuity inside of that traditional IRA to convert it to a Roth, you can do that with certain carriers. Okay, certain carriers like Nationwide allows a full conversion. You've got Athene, you've got Midland, you've got American Equity. They allow partials and full conversions. So you have to think kind of forward thinking as you do this and think, well, do I want to convert? Maybe converting doesn't make sense, but if it does to you, then you want to make sure that you purchase an annuity with a company that allows you to spread those Roth conversions out over time so you're not hit with a huge tax bill at the beginning. So we could talk about that. If you want to book a call with me and you're thinking about purchasing an annuity, I'd love to help you. There is a link below this video, and there's a link at my website, johnstevenson.com. You can book a call with me there. Otherwise, you can go to my website and you can check out the annuity calculators. You can see what the rates are, what they're paying, do your research, and then when you feel comfortable, if you want, reach out to me. I'd love to help. So I love showing everything. I always tell people this in my videos and when I meet with them, that it's so important to have transparency. It's so important for you to be able to see everything that's available and not be kind of pitched something just because someone wants to make a commission, but be able to be shown everything so you can make the best decision for yourself. Because some of these pay very low commissions, some of them pay high commissions, and a lot of times the higher commissions ones don't pay you the most. Okay, so I'm just honest about that, and I'll just tell you, you have to choose what's best for you. That's why I show everything on my website, and that's why I tell people go to my calculators and check them out for yourself. All right, so let's take a look at my screen. I'm going to kind of walk you through this so you can kind of see how this would work. Okay, so I've got someone in North Carolina, they got $500,000, they're male, and they want to buy an annuity. Okay, they've got 500 grand in an IRA, or maybe it's in a 401k with a past employer, because if it's with a current employer, they cannot take money out of this until they're 59 and a half. So you have to remember that. But if it is with a past employer, maybe they want to take some from that old 401k and maybe some from an IRA and consolidate it into one IRA holding that annuity contract. Absolutely, you can do that, and I do this all the time. So here's what it looks like. You put in $500,000 in. If it defers for 7 years, maybe this person's plan is to take income at 62 at the same time as their Social Security payout. Their Social Security payout might be $36,000 a year. Maybe it's $3,000 a month. And with this, I mean, they're getting $62,000 a year from this. So if we're looking at that plus Social Security, that's pretty good. I mean, we're looking at what, $98,000 a year at age 62, just because they in hindsight, you don't want to look back and say, well, I'd like to buy an annuity, 7 years ago to have it grow, right? You certainly will not get as much as an immediate payout as you will if you let it grow for 5, 6, 7, even 10 years. Okay, so you have to remember that if you are planning on retiring in the future and you want to be able to prepare for it, then take advantage of annuity rates right now and lock it in for yourself. Lock in that growth. Okay, this particular one is with ClearSpring, and you can see there's a lot of options here. A lot of options. Some of these down here will pay me more than this one up here. Okay, so let me show you just real quick on the illustration so you can see how this works. Okay, so you got $500,000 going in here. And then here's the guaranteed values. I'm going to show you this first before the hypothetical. Guaranteed shows worst case, your balance goes down because they're charging you a fee. See the rider charge right there? They're charging you a fee, but that fee gives you a guaranteed benefit-based growth to $925,000 multiplied by 6.7% withdrawal rate, giving you $62,000 a year. So you're getting something for that fee. But worst case, if there's no index growth, okay, on that portion of the funds, then your account balance is going to go down. But it doesn't matter. You're buying lifetime income, so you're not doing it to keep the money around. Now, if you look at the hypothetical one, they show you the account balance lasting longer if you have index growth, which you probably will, but you just don't know how long it's going to be. But again, keep in mind the guaranteed side here is the benefit base. This is the guaranteed growth. Okay, they're giving you this. They're charging you a rider charge for growth. Let me just show you what the growth is. It's 8% compounded roll-up rate, okay? And that's after an income-based bonus of 8%. And so what they're doing is they're bonusing that amount, that $500,000 over here, okay? And then you've got that coupled with the 8% growth rate that's compounded over time. That's why it grows to $925,000. And of course, if you let it sit for 7 years, that's also why you've got a large benefit base multiplied by a large lifetime withdrawal rate, giving you a large amount of income. So it's always nice to be able to if you can do it early, do it early. If you can't, you can still get good rates. You can still get good immediate income. It's just like anything. In hindsight, it's like investing. It's always good to invest early rather than later. But the best time to plant a tree is 20 years ago, but the next best is today, right? So it's important to take advantage of rates if you can. So basically what happens is once you find an annuity, you might be looking through my calculators and say, all right, well, this looks good, John. How do I set this up? Well, what we'll do is we'll get on a call and I will submit the application with you, sharing my screen, and you'll be able to see all of the questions. You'll see the application. We actually submit it electronically with the carrier, and you'll see it'll ask you questions like what's your income, what's your expenses, what's your liquid net worth, how much of that are you putting into this annuity. They want to make sure you're not putting all of your money into it. And then, of course, they try to get to know you, like when you might take income. Because with an income rider, you can take it anytime you want. But they're making sure that I'm doing my job, right? They want to make sure that I'm recommending the best thing for you. Because, I can go out here and say, well, this is great, for that age, but is it great for age 70? Let's look. Okay, ClearSpring is still good, see? But they're not the highest at age 70. American Equity is. Okay, so American Equity is a great option for longer deferrals. Not so much for early deferrals, right? So if I look at this option in the early years, okay, I can see available lifetime income over here. Absolutely can take lifetime income. It's just not as high as the other options. So whenever you're meeting with someone, make sure they're giving you the best option for your time frame, not just the best. That's just because that's all they can sell you. And yeah, it'll give you lifetime income now. It'll give you lifetime income later. You want to make sure it's the best for your plan. So if you look at this, yes, American Equity is the best option if you let it sit and grow longer. They are the best. They beat everyone. So you can say $105,000 a year from only $500,000. That's pretty good. That's because you let it grow. Okay, you had a 6.5% roll-up rate after a 14% bonus. And you see that benefit base? Yeah, they're charging you the fees. You can see the rider charges over here. Quite expensive, right? You probably over this time period, you're going to probably be like $150,000 a year. I mean, sorry, not $150,000. $150,000 in total fees, right? That's a lot of fees. But you're getting a lot of income for it. So if you pull that income out, $1 million, even for 20 years, that's $2 million, from $500,000. So anyways, that's basically how it works. So if you got a 401k, then what we'll do is once the application is approved, I'm going to get on the phone with them and with you, and we're going to initiate the rollover over the phone. So if it's like Charles Schwab, maybe they handle it, or Empower, or whoever, we'll get on the phone with them. We'll say, hey, we need to do a rollover. It's going to be this amount, and it's going over to this IRA, this account number over at this carrier. Maybe it's Nationwide. Maybe it's American Equity. It doesn't matter. But what will happen is they will say, all right, well, we're going to send over the funds. Do you want to expedite it, or do you want us to send it regular mail? And then they will mail it directly to your house. Okay. Most of the time, they do not mail it to the carrier. They will mail it to your house. And then you have to forward it on to the carrier. And I usually just recommend FedEx or Priority Mail, and just get something that you can track and that sends it quickly over to the carrier. And then that is what you call an indirect rollover. They send it to your house, and then you send it over to the carrier, and then it funds the annuity inside the IRA over there. You own the annuity, you own the IRA, you can log in, you can see your money there just like anywhere else, but now you've got the annuity contract inside of it with the guarantees backed by that annuity contract. So that is basically, that's how it works. Okay. With an IRA, it's pretty much the same except less steps. You've got the carrier that will send the transfer paperwork directly over to the custodian. So if it's with Fidelity, they'll send it to Fidelity, and Fidelity they'll process it in 3 days. Okay, and they'll send the funds directly over to the carrier. So that's just a direct transfer, direct 1035, without you having to handle the check and actually mail it over. So it's a little bit easier. If you are able to do that, then that is, that will probably cut off like 5 days from the total processing time of taking the application and actually having an issue. So typically it takes like 3 weeks to get everything done from start to finish. So I handle both, but I always tell people, if you are able to open an IRA and have them roll it over into that IRA, then that would just create one less step for you. So especially if the 401k is held at a custodian that offers IRAs, that sometimes is easier and you can get that done in the same day. So I can help you with it regardless. You just have to, what I recommend is go to my website, johnstevenson.com, check out the annuities, see what they're paying, and watch this video a couple times. It can be, a little confusing when you're wondering, all right, well, I thought it was supposed to stay in my IRA, or I got a self-directed IRA. Can I keep it in that account? No, you have to, when you're buying an annuity contract, it cannot sit inside of your old account. It has to sit in the new account. That's an account that you own, but it has to be held at the carrier. Okay, so that's how that works. So I'm happy to help you with that. And I try to be as transparent as I can, as you can see. And of course, if you want to see what's available and if you want help purchasing an annuity, I'd love to help. So there's a link below this video. If you want to book a call, please feel free to do so. Otherwise, go to my website, johnstevenson.com. Check out the rates. Check out the income rider calculator if you want to see highest payouts. That's what we were looking at here. And then if you want to book a call with me, you can do so on the website as well. So I'm happy to help. If you like the video, make sure you like, subscribe, share, comment below. I'd love to answer your questions, and we'll see you next time.